All right, Dollar Industries is in focus right now. The company has come out with a very healthy set of June quarter numbers. And Mr. Gupta, the management, is joining us on the show to discuss that. Mr. Gupta, good afternoon. I was just looking at your one-year graph of your stock price, now hovering at 370. Have done phenomenally well, almost 4x in 1 year. And look at how your first quarter numbers have come in. Very sharp improvement in profits as well as healthy growth on top line. Margins around 18% are stable. Does it give you visibility for, say, 100 crore vicinity on net profit front, or even 800-900 crore on top line for the full year? Talk to us about how these numbers can sustain.
These lockdowns because of the COVID second wave, there were lockdowns in states according to their situation. So we were hopeful of doing. Had that COVID second wave lockdown was not there, we would have easily touched the turnover of 350 crores in the first quarter. But then we could do only 205 crores. The full year, we hope to reach a turnover of around 1300. So depending on the turnover of 1300 crores for this current financial year, we hope to have an EBITDA of around 17%, PBT of around 15%, and PAT of around 11%. This is the working we are on with, and we hope to succeed on this.
Sir, the festive season is just round the corner with Rakhi and then Ganesh Chaturthi, and then all states will start having festivals all the way. Tell us, how would you be entering FY23, because that will be the real normalizing year after the V, the crack and the improvement. For 23, what are the kind of numbers you are targeting?
We have targeted a turnover of 2,000 crores by the end of March 24. That is our focus. And once this pandemic is over, say by the end of this current fiscal, we hope to jump into business with a growth rate of not less than 25% every year. Because unless and until we do that, we will not be able to reach to that 2,000 crore number by the end of March 24. Because of this entire this COVID period, everybody must have also noticed that these unorganized sectors, the players of the unorganized field, they are into really a big problem because of liquidity crunch and because of the production bottlenecks. So we are striving very hard to capture those markets being taken over by the unorganized players, and we are succeeding also.
That's very nice, the kind of targets which you have set yourself. Mr. Gupta, talk to us about the strategy the company is taking to drive top line growth. What kind of product differentiation are you doing? What kind of distribution focus do you have?
Number one, we are building up an integrated warehouse in Calcutta with around 3.5 lakh square feet. So that integrated warehouse will, of course, allow us to have more 1 to 2% better margins in the coming time. Number two, we are pursuing actively the digital marketing for promoting our products directly to the consumer sales. Number three is we are achieving success in Project Laksh by implementing various digital platforms like automated replenishment system, DMS, SFA, and the war room. We are also updating our ERP to SAP, which is currently going on. By the end of this fiscal, we will be successfully migrating to implementation of SAP. And then right now in athleisure segment, our contribution is the total contribution from athleisure segment is around 14%. And this particular segment, we are coming up with new products. And this segment is hardly 2 years old. And we are steering our entire team to get into this athleisure segment because there is a huge gap in terms of organized players into athleisure market. So we are also taking bigger steps for initiation of more and more new segment of products into athleisure segment, because this athleisure segment is a huge demand because of currently work culture being translated into work from home. And then we are also we are into in order to achieve long-term capital goals, the company has started taking up steps to increase the production level and bring efficiency in the supply chain. For this, we have already going ahead with the capex plan for further installation of 20,000 spindle spinning mill. Right now, we are already having a spinning mill for 22,000 spindles. We are again going into one more unit of spinning mill with the 20,000 spindles with an investment of around 65 crores. So these are the steps being taken to move in a very speed line to reach the target of 2,000 crores by the end of March 24.
Very nice. Mr. Gupta, lastly, just leave with your thoughts on how will you be funding this growth you're talking about. Obviously, your internal accruals will be a part of it, or will it be fully? What's your debt level right now? Are you open to picking up some equity, or it won't be required?
Whatever capex, Mr. Jay, we have planned, these are not exactly that we will have to spend right now. These capex is will continue for 1.5 years. So by that time, all the internal accruals which we are having, that will take care of the capex plan. We have not initiated any funding from outside as of now. We want to fund this entire capex from our internal accruals. Because of better management of working capital on the working capital side also, whatever working cycle we have right now, we are going to have it better by the end of this fiscal by 15 days of time. So better management of working capital and then the profits which we are going to earn, that will take care of the capex plan.
So no dilution, no additional debt. Mostly about efficiency in capital utilization is how the debt,
correct, very much correct.
Done. Mr. Gupta, thanks very much on that very positive note.
Thank you,
we'll wrap out of the show. Thanks very much for watching. Goodbye.